It all started with the news that Stellar will integrate with traditional finance, with the DTCC, to bring tokenized assets on chain. But then subsequently, after the price pumped, it dumped. So what happened over here? Is this potentially a buying opportunity? This was the news around the DTCC, so Wall Street bringing volume on chain. And now Stellar has 9 times more tokenized assets than XRP. Yet XRP is worth 11 times more than Stellar. We even see how major assets like tokenized gold find their way on Stellar. So is the price just getting dragged down by the rest of all of crypto? Is this just a sell-off of Bitcoin and so Stellar gets pushed down with it? And so is this potentially an opportunity to take advantage of the mispricing? Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and I did this mainly through active trading of altcoins. My track record is on the website down below. Over the last 2 years, I published my trades in real time. With the current open positions, we are at an all-time high, and we made 47% per annum. While the rest of the market crashed, we did very, very well over the course of 182 trades. And currently we have 7 trades open. Those are of course available to the premium members, but all of the already closed trades, they are published here in real time on this website. I don't know many people in the crypto space that are willing to share their data that transparently. Now, the opinions around Stellar couldn't be more split. Again, a lot of tokenized assets, but then other data points that show chain revenue of only $300 per day. The opinions couldn't be more divided. Apparently, Stripe owns billions of XLM. Now, I publish various data points on cryptocurrency on X as well. If you're on X, formerly known as Twitter, then feel free to also follow this channel's account. Now, make sure that you follow the right account though. There are many imposters, many scammers. The real account is @BitcoinStrat. There's no other account. This here is the only real official account. Now, since all cryptocurrencies tend to move in similar directions at the same time, so when we've got a bull market, everything goes up. When we've got a bear market, everything goes down. What I like to do is I like to look at relative performance. How does an asset compare to other assets at a given point in time? Does it outperform? Does it underperform? And that's what we see on this chart. This is XLM relative to the others market cap. The others market cap is the market cap of all the altcoins that are not in the top 10. This chart starts in 2014, so that's 12 years of data, and XLM underperformed the altcoins by 99%. This here is a logarithmic scale. On a linear scale, it looks much worse. But we can make the argument that Stellar has now consolidated. It might even be slightly outperforming because we do see higher highs. We don't necessarily yet see higher lows. That's a bit more ambiguous. Here is XLM relative to Bitcoin. The chart looks very similar. Now, there's something interesting here. The appreciation tends to be much, much faster than the depreciation of the price. We shoot up and then subsequently we tend to trickle down. What does that mean? It means that in general, there seems to be some kind of long-term selling pressure. There seems to be an entity that continuously sells. And every now and then we see those big price spikes. That can be news. That can also be manipulation by market makers. Let's say if enough people are bearish on Stellar and they think the price will not appreciate, but rather continue to crash as it did in the past, then that can incentivize market makers to manipulate the price upwards, to buy the token in order to liquidate all of the short sellers. And maybe that's exactly what we have seen with the recent DTCC news. Maybe it was another opportunity for the market manipulators to push out a few short investors. And maybe we are re-entering the trickle-down relative evaluation. There's a chance that history just repeats itself yet one more time. The patterns clearly look very similar. Now, here's the circulating supply of XLM over time. 1 year from now, we will have 5.9% more supply, and that inflation rate slightly declines over time. It's still, of course, much higher than Bitcoin's, right? Bitcoin has an inflation rate of 0.8%. In 2 years from now, this will go down to only 0.4% per annum. So we do need more demand for Stellar, for XLM to be able to outperform Bitcoin. Fundamentally, the blockchain doesn't work that differently to others. 7 years ago, it burned roughly half of its supply trying to push up the price. But we all know how this didn't work, and the technical numbers aren't really that impressive. It still takes 5 seconds to finalize a transaction. That's faster than Bitcoin. It's comparable with Ethereum. Now the TVL, the total value locked, that's on the Stellar chain. That is going up over time, and that's very positive. It's currently at 200 million though. And that does not necessarily justify a market cap of 6 billion. Have a look at how over time the market cap tended to peak out between 10 and 15 billion. The price did not get higher highs from one cycle to the next. Only the market cap did. Again, that's because of the token inflation. It takes more money to achieve the same kind of price. My base case is that Stellar is rather going to continue to sell off from here because attention is again going away from the asset. There is correlation between attention, right? So that's the social engagements, the bar chart in the background, and the price. That's the line chart. Whenever there's more attention, the price tends to shoot up. When attention goes down, then the price tends to follow as well. And again, it might just mirror what it has already done a few months ago. On-chain, the metrics aren't really that impressive. This is all just trading based on hope, based on the successful adoption of trading traditional finance assets such as stocks and bonds on-chain. Here's the number of processed operations over time in orange. It peaked in September 2022, so a bit under 4 years ago. Really, it's again leverage that determines where the price is going. This is the open interest or the amounts of bets that are currently been made on XLM. When this is very high, the price tends to go up because there's all of this leverage and there's arbitrage bots trading between the perpetual futures market and the spot market. When the open interest goes down, the price tends to follow as well. So this is the open interest in green. The price is here in yellow. Once open interest crashes, then the price subsequently trickles down as well. And we are seeing again how open interest tends to rather decline. It's not yet at the 100 million mark where it tended to bottom out. It's currently at 170 million roughly. Trading volume tends to move in a similar way, as in a lot of trading volume means a lot of attention, means a lot of activity and higher prices. Once trading volume comes down, that's an early indicator of the price following. Right? The trading volume already normalized over here, and the price kept on following for the subsequent weeks and even months. And now trading volume has spiked again. It has already come down, but the price has not yet come down all the way. And so I think this theory of very quick pump and dumps, of short-term market manipulation, of very quick price rises with subsequent declines, I think it will hold one more time. I am considering to open a short position on Stellar very soon. Now, I've run a few back tests. I show this several times on this channel, how to best trade Stellar. And the result is that we should take moving average crosses between the 2-day and the 8-day SMA. And if you look at that right now, then we already got the dev cross 1 week ago on the 21st of June. Once we see the golden cross, once the 2-day SMA goes above the 8-day SMA, that's when we want to be careful. That's when the momentum might be turning around, and maybe we see another short-term spike of potential manipulation. But as long as the 2-day SMA is below the 8-day, the momentum, in my opinion, is rather negative. That's at least what the backtest says. And the backtest tended to make money most years following those two moving averages, even when we include all the funding fees and all the financing fees. Still, following the cross of the 2-day and 8-day SMA was a pretty good short-term indicator to time the Stellar price, right? We rather want to be betting on rising prices when we get the golden cross, and we want to bet on falling prices when we got the dev cross. And currently the momentum is very much still negative. And so this is in general my approach with altcoin trading. That's why we are up in the last 2 years, and relatively consistently so. It's because we use back tests and we try to figure out what historically worked the best. And whenever we get a dev cross, we tend to be betting on falling prices. For example, here, right, the Luna token, that's when we got a nice dev cross. And subsequently, we then close that position once we got the golden cross. And so, of course, this doesn't work every single time. We do have trades where we lose money, but what matters is the long-term trend. And that's definitely in our favor. Now I want to share one of the open positions that are currently traded by us. And that's this position over here. So we are betting on a falling altcoin price that has high token inflation. So where new supply hits the market all the time, where we then bet on a rising Bitcoin price against this. So we cancel out the general macro, right? Let's say Bitcoin goes up and the altcoins go up as well, but that particular altcoin tends to go up less. When Bitcoin goes down, the particular altcoin tends to go down more. So it tends to long-term underperform. And because of that underperformance, we can flip that. We can bet on a falling price of it versus BTC. And then we get this chart. This is one of my favorite trades. And I recommend everybody that gets into similar kinds of setups to start out with this position. And I'm now sharing that position for free in the link down below. So you don't even have to join the paid membership. You can simply get that trade for free in your email. You also get a tutorial video on how to set up that trade, make your first money, make your first gains, see how this is really working. And then you can still decide to reinvest those profits in premium to take it to the next level. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.